So we're here this morning with David Neighbors and Tammy England with H&R Block. Recently, FRLA and H&R Block have partnered to offer more benefits to our members and make sure that our members who are already clients of H&R Block are utilizing all the great services they have. So before I turn it over to the tax experts, I just want to run through a couple quick housekeeping things. First and foremost, this webinar is being recorded, so it will be posted online later. We will share that after the webinar later this week. All lines have been muted, so if you would like to ask a question, which we will have time for Q&A at the end, please utilize the chat box that you see in the webinar window. Send those over and we'll hold all questions until the end, but feel free to send those chats in anytime. So with that, I'm going to hand it over to you, David and Tammy, and take it away.
All right, great. Thank you. So as Sally said, my name is David Neighbors. I'm a district manager for H&R Block in Jacksonville, Florida, and have been working with Sally since October to help provide some educational benefits for the members of FRLA. So one of those things are offering some education on the new tax reform. I'm sure that's a big topic, especially this time of year for a lot of people in general, because it is something that does impact everybody, because it's a very large tax reform that we haven't seen in quite some time. So with that, I do have Tammy England with me today as our tax expert.
Hi, my name is Tammy England. I'm a manager here in Jacksonville, Florida for H&R Block. I manage 2 offices. I've been in the tax business for about 22 years altogether. This is my 6th tax season with Block, and I'm an enrolled agent. So hopefully I can answer your questions today.
Yep. So with that, she's actually going to be the person going through the educational piece on some high-level information on the new tax reform. And then we'll talk about next steps after this if you have additional questions or needs. And then we'll also at the end share some of the additional benefits that are available for members of the FRLA. Okay, so I'm going to turn it back over to Tammy and we'll get started.
Okay, here's our first slide, and just want to let you know that today we won't be discussing all of the elements of the new tax reform. The topics that we've chosen are the ones that affect the majority of taxpayers out there. We'll only be covering individual impacts in this session. So if you have your own business, then we suggest you consult with a tax professional about how the new tax reform will affect you as a business owner. Some of the things we're going to cover today, we're going to give insight into tax brackets and how they've changed to see if you'll be in a lower or a higher bracket. The personal and dependent exemptions, they're suspended until 2025, so this could impact the benefit of itemizing on your tax return. The child tax credit has changed, and there is a new non-child dependent credit that has been introduced. The standard deduction is higher for all the filing statuses. The itemized deductions are limited this year. Some are eliminated and some are modified. So we'll be going over that, and we'll discuss the health care penalty and how that will affect you. It is eliminated beginning in 2019, but we'll talk about 2017 and 18. So the new tax reform bill is called the TCJA, which stands for the Tax Cuts and Jobs Act. It's roughly 500 pages, and it contains dozens and dozens of changes to the tax code. You'll see the brackets there on your screen, the pre-tax reform, which affects 2017 returns, and then the post-tax reform, which affects 2018 tax returns. Most filers will pay a new tax rate beginning in 2018. The tax rates are progressive, meaning tax rates rise as income increases. And in comparison to previous tax brackets, the new rates are slightly lower and each bracket is slightly broader. Under 2017, the tax brackets and rates, a single taxpayer with $40,000 of taxable income would be in the 25% bracket, would have a liability of $5,739. In 2018, this same person with $40,000 of taxable income would be in the 22% bracket and have a liability of $4,740. So that's about a $1,000 decrease. Going forward, the brackets will be adjusted based on a different inflation measure than before. They're going to use the Chain Consumer Price Index for all urban consumers. It's expected to grow more slowly than the previous inflation measure. So while most taxpayers will pay less, some might pay a slightly higher rate, and it's most likely to impact upper middle class individuals with marginal tax rates of 35%, which is up from 33%. So we're going to talk about personal and dependent exemptions now. In 2017, taxpayers could claim a personal exemption for themselves, their spouse, if married filing jointly, and each qualifying child or qualifying relative. And each exemption reduced your taxable income by $4,050 in 2017. Under the TCJA, personal and dependent exemptions are eliminated from 2018 through 2025. The most important thing that you're going to want to do as a result of the elimination of this is to consider adjusting your W-4 with your employer, which is the form to tell them how much to withhold from your pay. If a single parent with 2 children currently claims 3 allowances on the W-4, they do so because they were able to claim those exemptions. Since the exemptions are eliminated, that person continues to claim 3 allowances. They might not be withholding the correct amount and could owe the IRS at the time they file their return. Keep in mind, how to adjust your W-4 is not related to just one provision of the new law, but should be done considering your whole tax situation and how the provisions impact you. When you start a new job or experience a life change, one of the many forms you need to fill out is the W-4. So it tells your employer how much to withhold, and under the old tax law, you would indicate the number of allowances you would like to claim, and each allowance reduced the amount of taxes your employer withheld. You could claim an allowance for each personal exemption that you would claim on your return, generally including one for yourself and one for your spouse. Additional allowances were also available for certain other items, including estimated itemized deductions, tax credits, and the standard deduction. The number of exemptions that you are qualified to claim each year affected more than just your W-4 and tax withholding. Under prior law, your exemptions factored into determining your adjusted gross income on your return, as well as whether you were required to file a tax return. The personal exemption amount was also subjected to a phase-out threshold depending on your filing status. The new tax law suspends this deduction for personal exemptions and modifies the rules for when you must file a return for years starting after December 31st, 2017. This affects your W-4 because, unlike prior years, you may no longer be able to claim an allowance for personal exemptions. Until the IRS updates Form W-4 with new instructions, it is unclear what allowances will be available. Additionally, without personal exemptions, if you're unmarried, you must file a return if your gross income is higher than the standard deduction for your filing status. If you're married, you must file a return if your combined gross income is more than the standard deduction for joint returns. It is important to adjust your Form W-4 with your employer so you can begin to withhold the correct amount. If you go to irs.gov and check out Notice 1036, it will give you an idea of the allowances that we can now claim and the withholding amounts, and I would suggest you compare that with a pay stub from last year to make sure you're withholding enough. The child tax credit is our next topic. Now, up until 2018, the child tax credit was $1,000 per child under the age of 17 that you claim on your return. Under the new tax law, it increases from $1,000 to $2,000 per child, per qualifying child. There is a refundable portion of this credit, and it increases from $1,000 to $1,400 if you qualify for that. The higher child tax credit will be available for qualifying children under the age of 17, which is the same as 2017, and the phase-out range increases. So with taxpayers with modified adjusted gross income of over $200,000 or $400,000 if you're married filing jointly, you can claim the credit. It doubles the phase-out range for the new law based over what the old law was. You can't claim a child tax credit for a child who doesn't have a Social Security number, however. They have to have one by the due date of the tax return. Now, they have established a new non-refundable credit for dependents who did not qualify for the child tax credit. This is brand new. There was nothing like this before. Taxpayers can claim a credit for children who are too old for the child tax credit, as well as for non-child dependents, such as a parent. There's no Social Security number requirement for this credit, so taxpayers can claim the credit for children with an I-10 or an adoption tax identification number if they otherwise qualify. They cannot claim the credit for themselves or spouses on a married filing joint return, so it's only available for anyone in your household who meets the definition of a dependent, and they cannot be eligible for the child tax credit. You'll see on your screen the standard deduction amounts for 2017 and then the amounts starting for 2018, and you'll see they've almost doubled. So the standard deduction for single individuals on the 2018 tax returns will be $12,000, up from $6,350. Head of household will be $18,000, which is up from $9,350. And married filing joint will be $24,000, which is up from $12,700. So because of this increase and the changes to the rules for itemized deductions, we're expecting many, many taxpayers who previously itemized to now claim the standard deduction instead. So you may not have to file the Schedule A anymore with your tax return. However, you still might want to track your expenses so that you have the information to compare that to the new standard deduction amount to see if you do benefit from itemizing. So now we're going to talk a little bit about itemized deductions. The IRS estimates that about 30% of all taxpayers itemized using Schedule A before the Tax Reform Act, instead of taking the standard deduction. However, there's going to be a large impact with this new tax law on itemized deductions, and some have even been eliminated. Some are modified, and we're going to list those. I don't know how many of you out there take employee business expenses for things like mileage and meals and travel that you do for your employer, but those expenses are now eliminated as a deduction. So say you were a home health care nurse and you drive your car and buy supplies, you can't take that anymore. Remote workers who work from home for the convenience of their employer used to be able to take an office in the home, and that deduction has also been eliminated. I'm sure a lot of you have heard about the SALT deduction, which stands for state and local income taxes, and we're lucky here in the state of Florida we don't have those, but a lot of states do. They have put a maximum on this deduction. So state and local income taxes plus your property taxes on your home plus any other personal property taxes that other states might have to pay, they're limited to a $10,000 max. Here in Florida, we can take sales tax, so it would be sales tax plus your property taxes. You cannot be more than $10,000. Home mortgage interest is still deductible, and real estate taxes are included in the $10,000 limit, but home mortgage interest is still deductible. So for mortgages taken out after December 14th, 2017, only the interest on the first $750,000 of mortgage debt is deductible. This may not be a factor where housing prices are lower than that and mortgages are below the limit, Before December 14th, 2017, you could take mortgage interest on a maximum $1 million mortgage. Also, home equity loan interest will no longer be deductible after 2017. It affects all home equity loans used for purposes other than to improve the current loan, even if it was taken out before December 14th, 2017. Charitable contributions are still deductible. In the past, we could take up to 50% of our adjusted gross income as a charitable contribution. That law has been changed. You can take up to 60% now. One of the biggest donations it's going to affect is donations to alumni organizations that give donors tickets to the games based on the amount of their donation. If you receive anything in exchange for your donation, it will not be deductible under the new law. But something they have changed, if you were one of those generous people who gave donations to qualifying hurricane relief organizations, you are not subject to the 50% cap. So you would be able to deduct your contributions in full if you gave to the victims of Hurricane Harvey, Irma, or Maria. Medical expenses, the next item. Medical expenses are deductible after a deduction of 10% of your adjusted gross income for 2016. And it was set to be 10% until this new law changed it. It goes back to 7.5%, which is what it was previously for 2017 and 2018, and then in 2019 goes up to 10%. And what this means is you take 7.5% of your adjusted gross income and deduct that from your medical expenses before you can deduct the first dollar. So it typically is going to affect you if you have higher medical expenses. Most people are not even able to use this if they're pretty healthy. The Affordable Health Care Act made it a requirement to have health insurance. And in years previous, we've had to compute penalties for people who don't have the proper health care coverage. That is continued for 2017 tax returns and 2018. There will be a penalty for no health insurance. But in 2019, this penalty has been eliminated, and you will not have to pay it anymore if you don't have the proper health coverage. So we just want to let you know that with any of your tax concerns, H&R Block can help you. We will do free consultations, answer your questions, and if you want to speak to a tax professional, we have people who can help. So we're going to take questions here in a minute, but we just want you to know that our mission is to look at your life through taxes and find ways to help you. We know you don't think about taxes all the time. That's our job. Every year we take continuing education to stay up to date on the new tax laws, and I feel certain the rest of this year we will be taking more and more education on the new tax reform. The IRS has stepped up its audits and notices over the past decade. They are up more than 570%. So we're here to help you maximize the outcome of your tax return and plan for the impacts that the new tax reform will have on you and your family.
All right, so one thing we wanted to show you is a tax reform impact tool. So H&R Block created a tool that allows you to go in and do some estimations on what kind of impact you will have on your personal tax return in 2018. So just to clarify, 90% of the information Tammy just went over impacts you on your 2018 return. There's only a couple things that will impact 2017. The biggest one is the medical expense reduction. But most of that information impacts you in the current tax year you're in. So when you go to file in 2019, that's when you'll start seeing most of these changes impact your tax situation. Okay. So let me go over here. So if you go to hrblock.com, so www.hrblock.com, up here at the top it says tax information and tools. If you see here, there's a tax calculator. If you click on tax calculator, it'll take you to this interactive questionnaire, okay? So I'm going to walk you through a brief one. I'm not going to answer a bunch of the questions, but I just wanted you to get an understanding and feel of how to navigate this. So you would choose your status. And then there's a series of questions here that you'll answer. Filing jointly, I'm going to hit continue. Qualifying widow, no, continue. My age, continue. Spouse's age, and number of dependents, and then do I have health insurance, right? Then you put in your birthday.
Dependent's birthday.
Oh, sorry, dependent's birthday. Sorry about that. Dependent's birthday. That's why Tammy's here to keep me in line. All right, and then through here, you'll answer a few more questions about income. Oops. All right, so for 2017, it gives me my estimated tax refund here, right? And just remember, this is an estimate. Once you sit down with somebody, you can get more information. And then up here, right above it, it tells me what the new tax reform impact will have on me for next year, right? So you can see the difference. If everything's exactly the same, it would make a change of an additional, $1,700, $1,800 in refund impact. So this is a great tool just to get an idea of what this impact will have on you. But as you can see, there's more information that you can enter. But for the essence of time, I didn't want to go into all the details there. But it's a very interactive and useful and easy to use tool that I just wanted to share with you so you had that. And you can certainly share this with your employees that work at the organizations that you work for as well. All right, so let me go back here. I got a couple more slides I just want to talk through, and then we'll open it up for some Q&A. So current promotions that H&R Block are running through February 28th, we have a refund advance where you can come in, you can file your return with us, and also submit a bank application to a third-party bank to see if you can get a free loan against your refund, which is called a refund advance, of up to $3,000. There's no fees, no interest on this loan. It is against your refund. They do a credit hit and the full application to a bank to make sure that there's no concerns there in regards to being able to get repaid on this loan. But if you're interested in that, you can also get more information by going to www.hrblock.com/refund advance or come into an office and ask questions about it. We also have 1040 EZ for free. We know that an EZ can be filed pretty much anywhere for free online. And we wanted to be able to share our expertise and provide an experience that's different from filing yourself online for free. So you can actually come into one of our offices, use a tax expert, and go through the process and get your EZ form filed for free. Now, if there are some additional forms required for such as earned income credit or the Affordable Care Act, there are some additional fees for that, but the form itself is free. And you can also find out more information on that program as well at that website listed there. As a FRLA member, part of our partnership is offering a discount to any new client of H&R Block that comes into the retail location. So here, there was a coupon voucher that went out in the FRLA magazine, and then it's also listed here. The coupon code is 91438. This is for members only who are new to H&R Block. So if you decide to come in and use us for services, you can also get $25 off your tax preparation, okay? There's also a free benefit for employees. So we at H&R Block have what we call Employer Solutions Program, and it's a free benefit program that offers free education as well as discounts to companies across the country. Currently, we have over 4,000 companies that are nationwide that are enrolled in this benefit program, as well as over 4,000 local companies throughout the U.S. that are enrolled. Here's a list of some of the major companies. This is not all inclusive. There's plenty more than this, but these are some of the more common names. And I just want to share that with you because many of you might not even be aware that if you work for these companies, you already have some additional discounts available for you. And we'll talk about what those look like in just a sec. But there's a bunch of restaurants there that you can see. There's also pretty much every major hotel and resort organization has our discounts available as well for all employees of these companies. If you're not listed here, and where you can find these, by the way, is all of your companies have an employee perks site where you have all your discounts listed for retail and restaurant and travel. In that link, you should be able to find the H&R Block discounts that are available to you. The other thing too is if you come into one of our locations, all you have to do is mention to a tax preparer that you work for one of these companies. They can easily look it up for you and also provide you the discount at the desk for any of your employees. So here's some of the discounts that are available. If you're new to H&R Block and you come into one of our retail locations, you can receive $25 off tax preparation. A new client is someone that did not come to us the year before. And then if you're a prior client of ours, you get Tax Identity Shield for free, which is a great product to help protect your tax identity, protect you from tax identity theft and fraud. There's a lot of data breaches happening, especially the most recent one was Equifax, which is probably one of the largest data breaches there is. Anybody who has credit now has their information stolen. And a thief only needs birth date, social security number, and name to be able to file a fraudulent return. And this is a great product that we created to help consumers and taxpayers out there. So this would be 100% free. It is a $30 product, but if you're a prior client, you'll get that for free with us. If you're someone who likes to file their return online, or if your employees like to file a return online, instead of using other companies, you can actually receive 35% off using H&R Block's website to file online. And you can also use tax preparation software and that you can download to your computer, and you would receive 20% off of that. This to me is a great benefit offer, especially if you're a small business owner. I know that it can be expensive to try to put together a benefit package to help retain employees or attract new employees. If you're a small business owner, I highly encourage you to reach out to us and help us and let us help you get set up with this program. It's very, very easy to enroll. All it takes is some contact information and your EIN number, and then we can get in front of your employees and help provide some tax education, as well as providing some discounts to help them from a financial standpoint as well, because everybody has to file, and we're able to provide discounts for every filing method. So and if you're interested in this program for your company and you don't have it, please reach out to your local FRLA rep, and they can help put you in contact with the district manager for your area, so we can get you set up with this program. Okay. All right. So now we'll open up for Q&A. It looks like there's a few questions in chat.
Yep, I think we just had one question about the slides being available after the webinar. So like I said previously, this is being recorded, so we'll definitely post it so you can watch it. But we'll also, David, if you'd like to share the slides as well, we can send those out with our follow-up email.
Sure. Yeah, I can send it. I can send it as a PDF, so you have the slides available that they can utilize. And like I said, we can also do these types of tax talks for all the employees of your company. Just reach out. We'll do it for free. There's no cost to any of you for this education. We position ourselves as being the best in the industry, and we want to share our knowledge for free to help build that awareness for us and help people as well.
That's great. I don't see any other questions coming through. Again, if you guys have any questions, please use the chat box, or you can always reach out to your local FRLA representative or submit some feedback in the survey that will follow up this webinar. So I don't see anything coming through, so with that, I think we're done, David.
Okay.
So, thank you very much.
All right.
I appreciate having you guys today and sharing all this information with us.
All right. Thank you.
Thanks, Sally.
All right. Bye-bye.
Bye.